This is Spoolman with RSKsys International. We're going to quickly examine how our indicators helped us to trade effectively on September 21st. Now here's what the day looks like on the spoos. It's basically up and down all day long, although based upon the highs and the lows, this becomes a green day down. Now that having been said, what could help us to know when to trade? We're going to first of all show you what we saw very soon into the open. We've just placed our gap indicators. We've got a gap on the VIX, which is really obvious at the open, but we have a new gap here. On the trend. We have a new gap here. And we also have a gap on the VIX here. So gaps are filled. Likely, those gaps are going to get filled. When? We don't know. But that they will be filled is a certainty. But it becomes a compelling argument for taking a short trade. Now let's turn on the strategy. Now, the first thing that we notice is the trend on the trend. The trend is moving up into a projection. We're now postured to go long. The strategy gives us a long signal here, automatic. The trend continues to move up just ever so slightly to this next projection point here. Now we're getting a few trades right in here, but it nails the low as well. However, this low, when we look at the premium, is a whole new story. Notice what happens when we insert the premium. Oh, and before we do that, just a couple of other things. We talked about those gaps. There's a gap right here on the trend and on the VIX. And those two gaps also become compelling reasons to believe that this market is going to short, in spite of the fact that we have long signals. Now, let's insert the premium. When we look at the premium feed, this particular bar right here on the NASDAQ premium is very compelling. It's predictive. We know that the premium is a leading indicator that can help us to predict what will happen in the future. The spoos are at 37.25, 1537.25 at the low, and this premium bar is telling us the spoos will drop below that price at some point in time during the day. So now we have another reason to believe that this market will short. Why, though, do we have long signals in here? Part of the reason is because when we put the premium reading tool on the screen, notice what we find. At this bar, at the low, the premium, although hitting a new low, is positive. On each of the premium feeds, we are positive. We are not negative. And therefore, the big boys are buying that bar. Even though we know the premium is telling us the spoos will return to that price or lower. So then, where does the strategy short the market? We'll turn on the short strategy and notice how the strategy handles the situation. It's running the calculation. Boom. Right at the top. Now, we must say that this is based upon not using one of our particularly good filters. Now, let me show you what happens when we add one of our filters. Oh, and by the way, notice the highs on the premium. We knew as the market was coming down, based upon especially this high on the NASDAQ premium associated with this high on the SPOOs, that even that the market was going to go back up above 1541.50. That's what the premium is telling us. So another reason why, at least for the time being, we're going to be going long, but looking to short the market with a return back to the low of the morning at 37.25. Now, by using a slightly faster strategy, we have a little bit more volatility in the trades. A faster strategy is pulling the short trades a little bit early, but we're still going long, as you see here. We're still getting long signals, even here and here. Then finally, let's see here, then finally, by permitting the strategy to take trades on lower highs, we're divergent here, and that indicates all she wrote. Now we have reason, especially now, to be shorting this move, because we have a developing uptrend on the VIX. And you can see that right in here, a developing uptrend. So with this trend having been established, there was even more compelling reason now to short the market. At that point in time then, as we see the developing trend, we simply adjust the time to the strategy. We just make one simple adjustment and recalculate, looking for a new uptrend on both the trend and the VIX. And this is the actual amount of time that it takes to do a recalculation. There we go. Now, we get our first projection being hit right in here. And the strategy pulls off a long trade at this point. But this is discretionary. Why? Because the premium said that we were going lower than 37.25. We're not there. We're at 38. So that's early. That's more correct. Okay? So the strategy is giving us a premature trade, and we knew, based upon the premium, that the probability was the SPOOs are going to go below 37.25, and they did. On the other hand, if you had used the slower strategy without the filter, these would have been your results, which is really kind of interesting. Again, that was a discretionary trade because of the low on the premium here. Now, there was also reason to be concerned about not taking that trade. Reason, you had a new high on the premium here. This new high indicated that the SPOOs were going higher than 1540. They did, but they came right back down. And ultimately, there was no further trades other than the exit again down here. So that's our wrap-up. Pretty interesting day. Good trading at RSKsys International, RSKsys.com.